Hello and welcome to Morning Trade with Money Control. I'm Tata Chemicals and I'm here to help you navigate the trading day with some actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we will have your queries addressed by our guest on the show. But before we bring him on the board, let's see what the global handover looks like this morning. US third quarter GDP comes in ahead of estimates at 2.6%, easing recession fears. Now the Nasdaq slips over 1.5% as tech stocks sell off. The Dow Jones index ends higher for the fifth straight session. In some more news from Wall Street, sources suggest that Elon Musk has finally completed acquisition of Twitter and has taken full control of the social media website. According to sources, key management members, including CEO Parag Agrawal, has left the company. Asian markets largely lower ahead of Bank of Japan's rate decision. SGX Nifty, however, indicating a strong start for the Indian market. European markets recoup early losses to end near the flat line. ECB hikes rates by another 75 basis points on expected lines. Also signals a slower pace of rate hikes going forward. Meanwhile, Suisse plunges over 18% through the day after the bank announced a large third quarter loss. And on the show today, Nykaa has dropped below its issue price. Will it see more sell-off after pre-IPO period lock-in ends on the 10th of November? And stocks in spotlight today are Maruti, Dr. Reddy's, Infibeam and Tata Chemicals. Well, let's now get on board our guest for the day, Raja Venkatraman of Neo Trade. Good morning, Raja. Welcome to the show. Well, we saw the Nifty making a strong comeback in the last hour of trade to end in the positive zone. And this morning, the SGX Nifty is indicating a strong start above that 17,800 mark. What are your thoughts? Do you expect levels of somewhere around 18,000 somewhere soon?
Yeah, good morning, Aditya. So the entire market has not been moving in alignment with our expectations. The reason why I'm saying that is when we're looking at the SGX, all of us feel that the market is going to have a positive start to the day, but then the positive start soon fizzles out. And what we are seeing over the last few days is that at rallies you are experiencing some selling pressure. But then that does not take away the fact that the market is definitely having an underlying bullish bias, which has set in after it moved confidently above the 17,300 mark. So I continue to remain bullish on the markets. And one of the primary reasons for this has been Bank Nifty. And Bank Nifty continues to hold on to its upper poise and I feel that looking at the option position, 41,500 seems to be a very important zone which I am tracking, where I can see a lot of option positions being bunched up. So once if it's able to sustain above 41,500, we are looking good to go and challenge the former highs and also move beyond that. What would that mean in effect for Nifty is that the rub-off effect which will have on Nifty would be that it will be able to move higher and higher levels in Nifty. I am expecting around 18,150 on the upside. Now it has to hold around 17,600 on the downside in Nifty for the bullishness to sustain. But overall position looks to be positive. However, considering it is the last day of the week and we could be having a range-bound movement because yesterday not much of positions were added in the forthcoming week. So what we are seeing is a very sedate start to the November series, but then the overall outlook remains to be positive.
Well, overall outlook remains positive. Let's also talk about some specific stocks now. Maruti is slated to report its earnings today. The stock has seen a fairly good run this year, gaining somewhere around 20% or so on a YTD basis. Given the expectations, it is expected to report somewhere around a 4 to 5 times jump in its profit on low base. If that happens, how much more upside do you see on the stock, Mr. Venkatraman?
See, looking at the way the Maruti charts are set up, it definitely looks to be encouraging. And I envisage a target of around 10,000 in this month of November. The reason being that, it has spent a while spending some time at the support levels. And now what I'm finding is that the auto sector is once again picking up. Plus, the overall chart structure suggests that the rebound which is being witnessed currently could definitely carry the prices higher, and we could see a good move in Maruti. So it would be a good positional play to target for this month.
Right. The next one is Aditya Birla Sun Life AMC. It has reported a 10% jump in its profit on a YY basis, but revenues from operations are down somewhere around 6% or so. If you look at the stock on a YTD basis, it's down somewhere around 18% or thereabouts. Do you expect it to reverse that downtrend and maybe edge higher from here?
See, the overall price movement of Aditya Birla AMC has not been very encouraging. And what I see is that the continued sedate movement could be experienced for the forthcoming sessions as well. So I would not be a participant in this particular stock.
Right, Mr. Venkatraman, hold that thought. I'll come back to you and discuss more stocks with you. But let me also get on board Mr. Karan Thorani of Elara Capital and talk about the sharp slide in the shares of Nykaa. Good morning, Karan. Good to have you on the show. We all know that the shares of Nykaa have slipped below the IPO price, and the anchor investor lock-in ends on the 10th of November. Do you expect a fresh bout of selling to kick in the same way it happened in the case of Zomato?
Hi, Anita. Very good morning. So basically, if you look at Nykaa, I think in terms of a business model, the Nykaa as a company is profitable versus Zomato, which was making losses. And if you look at Zomato, they're also venturing into other streams of business, which is quick commerce, wherein the losses for a company like Zomato can increase. And even if you compare Zomato to its global peers in terms of whatever correction that would have happened, Zomato saw a huge fall, because of its lock-in expiry. I don't expect that quantum of fall for a company like Nykaa. Typically, because the company is profit-making, that's one reason which is there. It's a very compelling play in terms of PPC. So if you look at the business model, I think, they have a first-mover advantage here. No doubt, the competition is very strong. We are seeing new entrants like Ajio, Tata Click. We are seeing, existing players like, Amazon, Flipkart doing aggressive in terms of online PPC. But Nykaa has a strong recall for some of its brands. They have beautifully transitioned more towards personal care in terms of their business model, which is kind of leading to a higher frequency growth for them. And also, this is the only profit-making company amongst its peers, right? And this is despite them starting out at a similar time compared to what their peers would have started. So I think all these factors really hold very favorably for Nykaa. And I think, beyond the point, I don't see valuations coming down significantly, because of the lock-in which is there.
Right, you spoke about valuations. Well, after the kind of sell-off that we've seen, would you say that the valuations have only turned more attractive? Because a lot of analysts have retained their buy call on the stock.
Yes, absolutely. I think even we do have a buy rating on the stock, and I think valuations have turned attractive. Just to give you a perspective here, we have assigned an EV/EBITDA multiple of about 65 times FY25 earnings for the PPC business for a company like Nykaa. Now, the reason we have done that is that we have given it a very sharp premium as compared to its traditional peers because of the hefty growth rates that they're getting. Now, a company like Nykaa, typically in terms of PPC, is estimated to grow at almost about 30% in terms of revenues, as compared to its traditional peers who are growing at anywhere close to 8 to 12%. And if you even look at the valuations, I think the traditional peers would be trading at almost 30 to 35 times FY25 forward EV/EBITDA. And we've given it a multiple of almost about 60-65 times. That's almost 70 to 80% kind of a premium. That's primarily because of two drivers. One is the strong revenue growth, which could move beyond 30%. It could move in 35%. And the second reason is an improved margin profile. I mean, being a tech company, I think the EBITDA margin of the BPC is still very low, somewhere towards 4 to 6% range. We believe that there are multiple levers for the margin, and the margins could actually move to the range of 12 to 15% over the next 2 years. So I think building in this kind of an earnings growth, EBITDA growth, and building in this kind of a revenue growth, we believe that currently, if you look at this company after this sharp fall of almost about 30%, in the last 1.5 months, now the valuations are almost at par in terms of traditional companies. So right now, if you look at this company, they are trading at somewhere close to almost about 40 to 45 times in terms of PV/EBITDA, which is hardly a 30 to 35% kind of a premium versus the traditional companies. So, which is why we believe that clearly because of the compelling growth rates, because of the potential margin improvement, because of a premium customer base, because of compelling metrics around order value. If you look at the order value as well, I think it's almost 2x, 1.8x as compared to their peers as well, because they primarily cater to the premium customer base which is there. So I think basis all these metrics put together, the valuations have become even more compelling right now. And we have a compelling buy even from a near-term basis. So our near-term target price is 1431 basis FY25 earnings. And if you look at the stock right now at around 1,000 levels, I think there is a good 35-40% upside even basis near-term.
Right, a compelling buy is what is Karan's call on the stock. The company will also be reporting its earnings very soon. You spoke about margins picking up. So this time around, you expect margins as well as revenues to pick up as well?
Yeah, so I think in terms of this quarter, if we specifically see, I think revenue growth hopefully should be around 30% in the online BPC segment, which is the larger segment for Nykaa. If you look at the margins as well, I think the levers around there are two. I think one is the reduction in the fulfillment cost. Second, I believe that there is a good support, from the marketing support revenue, which is the marketing that they do for the emerging and the D2C brands that is there. And I think, third lever will also be in terms of frequency and also in terms of the number of orders going up, because it's a high operating leverage business. So I think basis all these 2-3 things in terms of levers, we do expect an improvement in margin, but that target band of 12 to 15%, I think that is a 2-year story. We'll kind of see that happening slowly over the next 6 to 8 quarters.
Well, the outlook on Nykaa remains positive. Thanks a lot for joining in this morning, Karan, and putting things into perspective for us. I look forward to having you on the show later again. Coming back to Mr. Venkatraman, the next stock on my list is Infibeam Avenues. The company has got RBI nod for a payment aggregator license, and it can now give digital payment services to any merchant in India. Now, if you look at the stock, that has been under pressure on a YTD basis. Mr. Venkatraman, what are the kind of levels that you will be watching out for on this counter?
Well, the news flow which is emerging is definitely encouraging, but what I'm seeing right now as far as the price action is concerned is that there is very tepid movements out there, and I would not be participating in this stock because it is looking to head lower, and it is at the moment struggling at around 14-15 levels, and it is at an important support, no doubt, but then it would not be a worthwhile time to, it would not be a right moment to invest into the stock.
Not the right time to invest in Infibeam. The last stock on my list is Tata Chemicals. The company has reported a threefold jump in Q2 profit, and revenues have also grown over 40%. Now, if you look at the counter, it has been witnessing a steady upside, and on a year-to-date basis, it has given a near 30% return. More upside on this counter, Mr. Venkatraman?
Yeah, definitely. This stock looks very encouraging. It has been able to sustain its higher levels after 1150 to 1200 is a range which it has always contested, and it has managed to hold on to higher levels over the last 3 months. I envisage a very strong, the results have also been encouraging, and combining it with the price action, I feel that one should definitely go from a trading as well as a multi-day perspective about 1200.
Right, let's now move on to our queries segment. For our viewers, if you have any queries, do send them in to us with hashtag AskMC, and we will have them addressed by our expert. The first query is coming in from Mr. Suraj Mandal, and he has asked for a view on NIIT. Now, if you look at the stock, it has been hammered out of shape, and over the last 6 months, it's nearly halved, down about 50% or so. So what should he do, Mr. Venkatraman?
Yeah, NIIT is having its results today, and what I feel looking at the charts of NIIT is that it is definitely struggling, and like you rightly said, it is not able to recover from its the entire bearish bias which has been witnessed in this counter. And looking at the IT space is witnessing some rallies in fits and jerks, and this counter is definitely headed much lower. So if you're having a holding, then it would be an appropriate time to exit. because the overall scheme of things does not look to be encouraging.
Not looking encouraging for NIIT on the charts. Next query is coming in on Bajaj Finserv, and Praveen Kumar has written in, and he has bought shares at the rate of 1780. Stock now somewhere around 1630 levels. It has tanked over, in fact, nearly 90% over the last 6 months. Mr. Venkatraman, more downside going forward?
Yeah, Bajaj Finserv had a very strong move till mid-September, and since then it has been on a continuous descent, especially due to the profit booking and the volatile market scenario. Well, looking at the overall price movement and the way the charts are positioned, it looks like it could head much lower. And right now it is at a crucial juncture. And what I envisage is there is a fair bit of support, which is around 16,100. 16,000, and if 16,000 is given away, then one should exit this counter.
Right. The next one comes in from Wish KL, and he has a query on railway stocks, particularly RITES. The stock has been not doing that well, even though over the last 1 month it has clocked in gains to the tune of somewhere around 20%. But over the last 5 days, it's clocked in losses to the tune of 5%. Where do you see this one heading, Mr. Venkatraman?
Yeah, there seems to be some bit of profit booking since the stock had run up quite a bit. But then overall structure seems to be positive. One could look at support level around 340 to 320 as a region to buy into, so that you could get a good average on your position, because the overall structure seems to be positive. Even on the higher time frames, the prices are looking encouraging. So this would be a counter which you should hold on to.
Right, hold on to rights. Moving on to the next query, it's coming in on Tata Steel. Jitendra Verma has written in, and he wants your view on this one. The stock is up over nearly 10% over the last 1 month, and even on a 5-day basis, it has seen a very decent 5% rally. More upside on this one, Mr. Venkatraman?
Yeah, Tata Steel continues to witness some recovery right now. I would not say there is a bullish bias yet, but then yes, the rally which you are seeing has got some more leg, and it has got a leg till around 120, which as far as I can observe. So yes, it's going to be a very slow and sedate move. It's not going to be a fast move, but then yes, there is some room available on the upside in Tata Steel.
Room for more upside on Tata Steel. The next query is coming in from Prabhakaran M, and he wants your views on IEX. What are your thoughts on this one?
See, IEX did not come with very encouraging numbers. The results were disappointing, and the price action has already indicated that yes, the prices were punished. But then right now it is at a point where it could witness some relief rally, but then the relief rally would only take it towards 160 level at the max. Because at 160 levels, I find that there are a lot of supply points emerging, and it could truncate the rally. So if you're looking at a short-term play, you could look at up to 160. But then if you're looking at it from an investment perspective, then you should definitely not consider this counter.
Well, steer clear of IEX from a long-term perspective. That's the call. Next one is coming in from Prabhu, and he wants to know your views on Motherson Sumi. The stock has been fairly volatile, even though it has done pretty okayish over the last 5 days or so. Do you expect some more upside in the counter, Mr. Venkatraman?
Yeah, Motherson Sumi has been struggling, and I don't think that there is much of upside which you can expect in this counter. It's best that one should ignore this counter from a trading or investment perspective, because this counter does not have much movement which you can see on the charts. So I would not be a participant in this one.
Okay, the next one and the last query for the day is coming in from Naveen, and he wants your view on Adani Power.
Yeah, Adani Power, like we have seen, the entire Adani group has witnessed a dramatic rise where it has tripled from over the last 1 year. Now, what I'm seeing as far as Adani Power is concerned, that it has come into a very sweet spot at around 330 level, and that would be a very good point to buy into. So this is a very good query, and amongst all the stocks which we have discussed, this stock looks to be the best bet for today's show.
Well, Adani Power looks to be the best bet from today's perspective. Moving on, this wraps up our query segment, but leave us with two of your stock picks for the day, Mr. Venkatraman.
Yeah, looking at the way the markets are positioned, I would continue to remain on the buy side. And I would like to suggest a buy opportunity in granules at current levels with a stop loss below 360 for an upside towards 378, 382. And also the metal space is again witnessing some bullishness. So I would go along with Jindal Steel at 470 with a stop loss at 463 for a target of 479 to 483.
Right, Granules and Jindal Steel are two of the picks that are being recommended by Mr. Venkatraman. On that note, thanks a lot for being on the show today, Mr. Venkatraman, and we look forward to having you on the show again. But before we wrap up the show, there's some more news from Wall Street. Well, according to sources, Elon Musk has completed his acquisition of Twitter and has now taken charge of the social media website. Now, CEO Parag Agrawal and finance chief Ned Siegel have also left the company's San Francisco headquarters. Now, Vijay Gadse, who's a legal policy manager and has reportedly been fired. Remember, Musk had until today to complete his acquisition of Twitter or enter into a courtroom battle with the company. Well, with that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is Markets with Santu and CJ.